What's up, everyone? It's Scotty with MoneyVest. So I am back at my home here in India. I was traveling earlier in the day, so I'm gonna be here for the next 3 to 4 weeks. And today, again, marks the 3-year anniversary for MoneyVest, and I really do appreciate each and every one of you for being a part of our amazing journey over the last 3 years. This is exactly the place. This is the room where it all started 3 years ago in 2021 on February 4th. That's quite literally 3 years ago is when it all started in this room. So thank you so much for being a part of our community. I really appreciate each and every one of you. And today's video is going to be a little bit more emotional because it involves Meta. And we're going to be taking a look at entire analysis of Meta stock and go over the earnings and the entire roller coaster of emotions that you and I and everyone in the community has felt over the last 2 to 3 years because of how volatile the stock has been. And to be honest, I'm very confident. I'm very, very, very confident in our analysis. I've never been more confident in the practice that we have to kind of look at high quality businesses that have good cash flows, good revenues, good earnings. And at the end of the day, that's really what matters and wins long term. In the short term, the market is a voting machine. In the long term, the market is a weighing machine. That's exactly what Warren Buffett mentioned and said. And the idea is that you want to look for long-term winners, companies that are going to do well, that have very strong cash flows and balance sheets and earnings, and are going to continue to do well in the future and not go after the next big thing or the next big trend or the next big speculative stock, because that can really crush you. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like and subscribe to the channel. I would really appreciate that. And links to our Discord and Patreon is going to be down below. The first week of the month is the best time to join if you want to be a part of our MoneyVest community. Again, access to all the trade alerts, buy and sell alerts, options alerts, all the members only private videos. Everything is going to be included with the link down below. So first things first, let's take a look at Meta. $475 per share. This is where it is on Friday, increased about $80 a share or over 20% gain in just one day. And that was an increase in market cap of almost $200 billion. And the reason why this is such an interesting case study and a story as part of our MoneyVest channel is because Meta, for me, was a very high quality stock and a company and a business that I adored for a very long time. And I invested in this stock. I know that a lot of people invested in this company, and we know what happened in 2022. I mean, Meta went through a lot of changes. Meta was obviously seeing a lot of challenges during 2022's bear market, and the fact that it dropped over 70 to 80%. I think it might have been down over 80%. So if you come over to Meta, you'll notice that at one point from its all-time highs of well over $382, Meta stock was down over 76%. 76. I mean, 3/4 of its market value was just evaporated in just a matter of 1 year, right? In less than 1 year, it pretty much went from $1 trillion company down to $250 billion company. So, it had some of its worst days, $251 billion wipeout in one single day, and that was the biggest wipeout in history for any company. And fast forward, and again, we did a lot of live streams, we did a lot of analysis back then, and the valuation was so low, so cheap for the earnings and the revenue and the cash flows and the profitability that the company had. And I remember doing a lot of live streams. So these were the live streams from 1 year ago, and all the videos, kind of going over, reiterating the analysis that, guys, look, Meta is a strong company. I don't know what's going on, but it's a strong business. It's a great fundamentals. Everything's fantastic. I mean, good revenue, good earnings, good profitability. And that was a tough time. I'm going to be honest, that was not a fun time because a lot of the comments, a lot of the, chats in the live stream, even in Discord, even in our community, people had lost faith. People were like, you know what, this company is done for. It's just going to be dead. It's going to be dead money. And, the Meta is going to go bankrupt without having any understanding of what the balance sheet looks like, because that's what sentiment does to you, right? When stock prices start selling off, the one thing that you are going to be afraid of is being the last one to sell when it's already down to zero, right? So you try to get out as quickly as possible before everything hits the fan. Everyone, it literally just, crashes all the way down. And oftentimes, I mean, for companies that have very strong balance sheets, they're not going to go all the way down to zero. Like they're just not going to go bankrupt because there's always going to be that floor. There's always going to be that valuation support and that support from the balance sheet. And so that was the kind of like the sentiment, because it plays a big role. And these were some of the comments, that I got back then. These are just the tip of the iceberg. Like literally this is tip of the iceberg, everyone, because this was some of the many comments that we received in Discord and on Patreon and even on YouTube. And get out of the stock, so many better options, or Facebook and Meta is dead, Metaverse is total BS. This right here, 24% drop today. This is a train wreck, folks. Rest in peace, Facebook. So again, these are just some of the many comments, guys. Like there's like multiple comments coming in for Meta. And I remember this particular live stream when Meta was at $80. So this right here, this is when I was traveling. And I remember doing a live stream on 27th October when they reported earnings, and I was actually live to cover the earnings call. And in the low 90s, dipped down to as low as $87, $88. I remember that time. It was not that long ago for me. Like I remember it so vividly because I remember all the comments and how that made me feel. Like I felt pretty shitty because I was like, this is a stock that we looked at and it dropped like 70+%. Of course, my fair value was a lot lower back then also, but it hurts, because it's not easy to kind of go through, not only for myself, because of course I was down on that position, but also like just watching everybody else, like, follow your lead and of course the stock price selling off quite considerably. That's not a great feeling. But it's all about having patience and conviction, right? I could have very easily sold right here. I could have very easily panicked if I was not convinced that Meta is a strong company with great fundamentals and financials. That's why it is so important, right, for you to analyze a stock. That's why, disclaimers that we put out, it's not for just fun, right? It's because I really do want you to research a company and a stock that I'm talking about. I really do want you to do the due diligence and spend some time reading up on the company, because when times like this happen, when the stock is down 20+% or 30+% or 70+% from its all-time highs, it's really you and how convinced you are with that company that's going to allow you to hold on to that company, okay? Hold on to that stock. If you're not convinced, if you're just simply going off of some guy's tip on YouTube or social media or TikTok or whatever, you're going to be very easily, very easily convinced to sell in a panic state because you have no conviction in that company. You have no idea what the company does. It was simply based off of a stock tip on social media. So it's really, really important to build that level of confidence with every company that you choose to invest in. Doesn't matter what it is. If you're investing your money, your hard-earned money into any stock, I really, really recommend that you spend some time researching that company, understanding fundamentals, because a lot of people threw in the towel. A lot of people were like, you know what, we're done. Like, I'm done with Meta. Like, this is dead stock, this is dead company. And fast forward a year later, look what happened, right? I mean, this stock is up over 500%, 450%, 450. Just think about that for a second. 4.5 times from those lows, and it's gone up almost $400 per share. I mean, it's done incredibly well. And that's the whole idea. And of course, on the contrary, now Meta is one of the biggest. It's a single day market cap gain of almost 200 billion. So after losing 251 billion in one single day, it's now up on the record of $200 billion gain in one single day. And that's how quickly things can change in the market. But it's all going to come down to having patience, having conviction, and being true with yourself and your analysis. Of course, from time to time, you're going to get blindsided. Stocks are going to be volatile. There's going to be a lot of price action, but you just cannot give in on that sentiment. You just cannot give in on the fear and the emotions of market volatility. It's really, really important to have that conviction and continue to be confident with what you're doing. So this right here were the numbers. Revenue coming in 40 billion, up 25% year over year. Income from operations up 156% year over year. Net income was up a whopping 200%. So tripled from same time last year to 14 billion as the company continued to cut cost and become more lean, and expenses were cut. And of course, advertising revenue picks back up. We're seeing a $5.33 in earnings per share versus $1.76. It's another 203% gain. And on a 12-month basis, 73% profit increase, 48% increase in, again, taxes, 62% increase in operating income, and 16% increase in revenue as well. Every single metric here also grew, 6% growth in family monthly active people, so MAPs, DAUs were up 6% year over year. MAUs were up 3% year over year. Revenue was up again 25% and 16% year over year on the fourth quarter. And again, capital expenditures 7.9 billion, 28 billion for the fourth quarter for full year, 28 billion for the fourth quarter and for the full year respectively. So again, significant cut down on the amount of expenses the company spent. And of course, they're buying $6.3 billion worth of shares and 20 billion of Class A common stock in the fourth quarter and full year respectively. So spent $20 billion buying back their own stock. That was one of the best investments that they could have made all of last year, because the stock price was on the way up and it's recovered, really, really well. The balance sheet has swollen up to $65 billion for the company and long-term debt at 18 billion. So again, it's one of the best balance sheets out there. And for that very reason, the company announced a 50-cent per share dividend. So they're going to be offering a quarterly dividend moving forward. So that's about $2 per share. I did the math. It's going to be about a 0.4% dividend yield. Nothing to write home about. I think Nvidia is kind of like very similar. Apple is a little bit over 1%. And Google, I don't think pays a dividend either. If you come over to Google, I think Google is a non-dividend paying stock, but Meta is going to be offering a dividend now, which obviously creates a lot of momentum, a lot of sentiment back up for dividend investors, dividend portfolios, pension funds, more risk-averse investors as well. And that's going to be a 0.42%. Like I said, is going to be that number because they're paying $2 in dividends per year divided by the actual market price. Comes out to 0.4%. Now, a lot of things have changed. I mean, valuation-wise, when we were analyzing Meta, and it was like a very, very comical buy because the valuation was so low, it was under 10. It was under 10. It was trading at 8-9 times earnings, and now it's at over 31, 32. So it's obviously increased 3 times from those levels, considering how much prices rallied back up. Price to sales, we're looking at about 7 to 9, and price to cash flow, we're looking at 17 to 16 at the moment. Pretty significant increase in the overall valuation here for the company. And this is going to be those earnings expectations. Analysts have very, very quickly just completely flipped on the overall earnings expectations. I remember last year and even the year before that in 2022, the earnings expectations were so gloomy. They were so bad that they pretty much priced in that Meta is not going to be growing at all. Like I remember pricing in for 6 to 8% growth. And even then, Meta was undervalued depending on where it was trading. So Meta did not have to do a lot. It really didn't have to do a lot in order to achieve this type of growth. They had to cut some expenses. They had to become a little bit more lean and of course put more focus on the core business, which is advertising, and really not put all eggs in one basket, which is the metaverse. They're still building that. They're still kind of pushing the Oculus. That's going to do well. And Apple Vision Pro is obviously launched, and that kind of validated the market for Meta as well. So overall, very, very strong recovery for Meta. Now, valuation-wise, yes, it's a little bit high, of course, and of course, not to mention on the weekly time frame, incredibly overbought with the RSI at over 86. The last time the RSI was at 86 was, I believe, back in 23, was at close to 84, 85, before seeing a little bit of a pullback, then rallying higher, and then seeing another pullback here for Meta of about 20-23%. So, strong uptrend, very, very, very solid recovery back up to new all-time highs. I want to just give you guys all a huge congratulations for everyone who held on, believed, and was part of this entire journey, because this has been an incredible case study for one of the most owned stocks. Meta was one of the most owned stocks in the Wall Street funds until 2022. Then it actually kind of was knocked down a few points. And now, once again, in my opinion, I think it's going to be one of the most owned stocks here in the markets once again. So where does that leave us? I mean, for me, 475 is not a price worth buying right now, obviously, because it's at an all-time high, 400-500% rally. I mean, significant valuation increase and expansion multiples. So it goes without saying that even despite the rally, despite the momentum, Meta is not a buy for me. But it's just a stock that you can hold on to and continue to kind of see that growth in the other parts of technology that Meta and Mark Zuckerberg are going to be working on. So huge congratulations to everyone. If it does pull back, which it will eventually, I have no doubt that it will, support level is going to stay put down to $385. That's going to be in line with this previous resistance. And on the daily time frame, again, a huge gap up. So it's definitely left a little bit of a gap here that it may or may not fill eventually. Again, 9 out of 10 gaps do get filled. So there is a probability that it does come down to fill this entire gap back in, down in the low 400s. But that's only going to be possible if the entire market and the NASDAQ starts to roll over as well. So hope you all enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us and getting access to all the members-only benefits, including trade alerts and private videos. Happy investing. I'll see you all in the next video.